In the last 35 days, we've added over 13,000 clients. And that's what we would typically add in 3 years. We added it in 35 days. But I do think that you're going to see a larger expansion into precious metals. People will understand when things start to go upside down, there are very few places. And this is why I think you could make the argument that this is why the central banks bought more gold over the last 18 months, really, than in any time in history. And, if you look prior to January, it was the second most in history, the most since 1967. But their numbers are doubling down. If you look month over month increase since the end of the year, it's approaching 200%.
Andy Schectman, the president and chief executive officer of Miles Franklin Precious Metals, a U.S.-based precious metals hub offering a full array of gold, silver, platinum, and palladium products, says this is one of the busiest periods of his almost 30-year career as a bullion dealer. With U.S. regional banks toppling one after the other and 722 banks reporting unrealized losses exceeding 50% of their capital, according to the Federal Reserve, in addition to many other economic woes, it's clear that the economy is far from fine, and investors are right to be very concerned. According to Schectman, Miles Franklin had 3 years' worth of business in the 35 days succeeding the Silicon Valley Bank collapse, as American investors scrambled to exit the struggling banking sector. However, panicky investors are not the only ones loading up on gold, silver, and other precious metals. According to a recent report from the World Gold Council, an institution that keeps global statistics on gold production and demand, central banks registered a strong demand for the leading precious metal during Q1 2023. The apex banks added around 228.4 tons of gold to their reserves, 176% more than they added in Q1 2022. Schectman recently appeared on The Jay Martin Show, where he discussed the exponential rise in the demand for gold and silver, primarily facilitated by the many signs of trouble for the United States economy. From the banking sector crisis to the debt ceiling drama and the country's massive debts, Schectman says investors are catching on quickly to the looming danger and exiting into gold and silver en masse. The reputable bullion dealer also believes that central banks are intentionally keeping the prices of these assets down to further their yet-to-be-fully revealed agenda. Before we listen to the insightful explanation from one of the greatest minds in the space, please take a little time to like this video, subscribe to the channel, and smash the notifications bell so you never miss any of our subsequent videos. You can also drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks, and enjoy the video.
Since Silicon Valley Bank collapsed, the anxiety level has been unlike anything I can really kind of even begin to explain to you here. If I were sitting having a beer with you and talking for an hour, I might be able to kind of let you know what it was like. But I guess I'll look at it, I'll say it to you this way. During Silver Squeeze, I thought we would never see demand ever again like we saw during Silver Squeeze, where it was, 18, 20-hour days for a week or 10 days. But that was motivated by greed. I mean, they say we're motivated in two ways, by fear and by greed. And this was people wanting to capitalize on GameStop, on AMC, squeeze the bullion bank, squeeze the silver market. They thought, make a fortune. Okay, cool. Wrong motivation. That's not why you buy precious metals. You buy it because it is wealth, not to get wealthy. It is wealth. But you flip-flop the table and I say to you, hey, your stock market, your bond market, your real estate market, yeah, they're all shaky. But when I tell you that the bank that you think is not a speculative endeavor, that it's just the place you put your money and know it's always there, if I tell you that can fall upside down, well, that's a whole different thing. And the anxiety that has been poured upon me over the past 3.5, 4 weeks is really, Jay, it's just, the sentiment is off the charts, and yet it only represents, but yet a very small portion of the public at large. I think we haven't seen anything yet, and if that happens, I think it will reignite this anxiety, this fear that, hey, there really isn't very many safe places to be, and that always brings me back to Doug Casey's famous saying that gold and silver are the only assets that are not simultaneously someone else's liability. And this theme of counterparty risk is only getting, I think, more and more prevalent and will as time goes on. My friend Rick Rule always says that if you take the Harvard Endowment Fund all the way down to Joe Sixpack, that allocation is roughly 0.5%. Now, I would say it might have expanded. Let's call it 0.75%, 1%. So 1% of the entire financial matrix has an allocation to precious metals, that being in the United States. It's still woefully underallocated to the public at large. And the thing of it is that what boggles my mind, you don't have to be overly sophisticated in financial assets to understand that, look for alternatives to a system that is in trouble. If you don't sidestep traditional financial assets, stocks, bonds, and real estate, and we continue to see rates rise and the economy crumble underneath it, I think that you're missing what is the only safe place to be right now. People say, well, what about treasuries? Yeah, I guess you could say that. But here again, we got the debt ceiling coming up in just a few days. What does that mean if they don't pass it? If there's a stalemate between the Republicans and the Democrats, what does that mean? I mean, we're technically broke and insolvent. At some point, the rubber has to meet the road with what we can spend versus what we're borrowing and indebting and putting our children and our grandchildren in debt for the rest of their lives. So this is all in flux, but I do think that you're going to see a larger expansion into precious metals. People will understand when things start to go upside down. There are very few places. And this is why I think you could make the argument that this is why the central banks bought more gold over the last 18 months, really, than in any time in history. They are doubling down, that being the central banks, their acquisition of gold and silver. And I think they're using the suppression of the Western price to run cover for it. And, that's allowing them to do this without really catching the attention. You mentioned at the beginning, it starts and it stops. Look, there's big suppression on COMEX. In fact, right now, it might be the largest commercial bank short position ever on COMEX right now. They are trying desperately to cap it, to keep it from running, because it is the barometer of the health of the dollar, of the system. It speaks to the frailty of the system, and letting gold and silver run is something they really don't want to do. And
the United States dollar has enjoyed the coveted status of being the world's reserve currency for several decades. And according to veteran investors like Ray Dalio and Doug Casey, that privilege is about to end. Last year, after Russia invaded Ukraine, the U.S. and its allies, including Canada and the European Union, announced a barrage of financial and economic sanctions against the transcontinental country, its president, Vladimir Putin, other top officials, and one of its western neighbors, Belarus, for its cooperation with and assistance of the Russian armed forces. Russian banks were also cut off from the SWIFT system, and the country's assets worth hundreds of billions of dollars were seized and nationalized in the United States. According to experts like Dalio and Casey, this was the final straw for the failing U.S. economy. Now, countries are dead set on reducing their dependence on the U.S. and the USD, so they won't be caught in a similar situation. In the past few months, 19 countries have asked to join the Brics alliance. 13 of these countries have officially submitted their request to join the group. Another 6 have asked to join but have not made it official yet. Several other countries are looking to join the alliance, and they all have one goal: to establish a new reserve currency and end the United States and the dollar's dominance. According to Schectman, this is exactly why many of the nations looking to join the Brics alliance are loading up on insane amounts of gold and silver. Here is another clip from his discussion with Martin.
Okay, why is it that our gold hasn't been audited since 1956 at Fort Knox? Why is it every time Ron Paul would stand up or Rand and say, hey, we want this audited, it gets vetoed? Here again, lack of transparency. The Chinese try to tell us they have 2,500 metric tons or whatever. That's a bunch of crap. We know that. Alistair McLeod will tell you they have closer to 38,000 metric tons, which would be 5 times the amount that we do. 18,000 held by the people and 20,000 by the state. No one is really being honest about it. But to your question, and I want you to think about this, these countries that I'm about to mention have either applied to Brics or potentially will apply to Brics, or are in the Shanghai Cooperation Organization or on the Belt Road Initiative. And you ask, are there any that hold bigger in terms of a percentage of their reserves? Venezuela who has applied to the BRICS, has 82% of their holdings, of their foreign reserve holdings, their reserves, 82% is in gold. Uzbekistan, 65%. Kazakhstan, 63%. Bolivia, 55%. Lebanon, 49%. Belarus, 40%. Turkey, the largest accumulator of gold in the world for the last 18 months has been Turkey, our ally who has formally applied to BRICS. Why do you think they're buying so much gold? At 29% of all of their reserves are in gold, because it's the only other tier one, and they're going to join BRICS, and gold will be the barometer by which these countries have equal say at the table. They're going to use gold, and they're going to use it to give them, to peg to a system that will give everyone equal say. I mean, if you look at the way the BRICS is set up, every single year the presidency rotates. This year it's in South Africa. And so they're doing it in a way that will give people equal say, instead of having one dominant player like the US and the IMF has veto rights at like 17% majority. I think they're going to do it differently here, that all of the countries who join are going to have equal say. But again, Turkey, 29%, Pakistan, 29%, Kyrgyzstan, 22%. So you have all of these countries here that are massively accumulating gold, continuing to accumulate it, which represents a substantial portion of their reserves. Another way of saying that is that it used to be dollars, but they are de-dollarizing in favor of the only other tier one asset, gold.
Instead of the absolute dominance that the United States offers, countries are being swayed by the camaraderie and equality being offered by the BRICS alliance. Calls to move away from the dependence on the dollar for trade are growing, and the alliance is working on the creation of a new currency that would facilitate that. Oil, the key commodity that secured and has so far sustained the dollar's place as the world's reserve currency, may soon be priced in another currency, with Saudi Arabia's increasing connections with the BRICS alliance. The oil-rich country that started the petrodollar system is cozying up to the enemies and gradually severing its long-standing relationship with the United States. The collapse of the United States and the dollar will, of course, not happen overnight, but it has started. According to data from the IMF's currency composition of foreign exchange reserves, the US dollar accounted for 58.36% of global foreign exchange reserves in Q4 2022. In 1999, it was over 70%. Central banks are exiting the dollar and embracing gold and silver. You should too. What are your thoughts on Andy Schectman's discussion with Jay Martin and his assertion about the direction of the U.S. economy? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.